The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday, Wednesday, Friday, 11 o'clock till 12 Eastern Time at 877-927-6648. Hey, there's not too much to do today. We know exactly what we're looking for, so I can take as many calls as possible. I will be leaving a tad early, and I'm hoping that I will have a guest who will be able to take over my last segment. Hopefully Steve Rhodes will be around to be able to do that. I believe he will be, and that'll be terrific. So I'm right here for at least the next many segments until the very final one. And thank you guys for having a fabulous 9 o'clock till 11 o'clock a bunch of shows. And then straight after me, Nico Dahan. Well, straight after at noon, that is, Nico Dahan, a Primer Lifestyle, Dave White, Power Trading Hour, 3 o'clock till 4, and then 4 o'clock, of course, 4 o'clock till 6, one and only Tom O'Brien. So this is what I'm looking at. And one of the reasons why I was this is very funny. If I'm asked now, at this particular point, are you bearish or bullish? I have to tell you, we have long positions. We have core long positions, which so far have held really well from November, December, still holding there. One I'm very, very concerned about, but because it's part industrial, part financial, but it's holding in. That's good. And the other one is somehow climbing to new recovery highs. I cannot complain. Then we added a new stock, was it yesterday or the day before? 2 positions, not just one, but 2 small positions, which of course can add up. But I thought I was in a completely different sector. It was in natural gas. I thought, hey, you know what? Natural gas to me seems to have made some kind of a bottom that looks very different from all the other bottoms. It has a possibility to move a little higher and should not be affected, but even if oil comes down, because it's the psychology of moving to natural gas that is very important. That is almost market independent, I thought, until last night when all of a sudden the stock that we just got, I guess we got yesterday, started to slip quite sharply, still way above our stops, I should put. And then out of the blue, I'd said if it gets to a certain level today, we'll raise the stop on the second position, and this is the situation that it's actually rallying now. So here I am in our portfolio three long positions, which one has 2 smaller parts to it. So it's like 4 long positions. 1 short position, which is still working very well, and that's been a short 4 months. And I wanted to add. And so what I did is I looked through all the stocks that were making round number highs recently. And there was one stock, RE, which has just been spectacular. It's just had a fantastic move, and that is Everest RE, REITs, I guess the real estate group. And I thought, well, I don't have a signal yet in the weekly, not at all, not in the monthly, but it made 2 round number 103 highs back on Wednesday and Thursday, and I thought, you know what, we will short it at the opening, and all we have to do is put a stop 1 penny above. So we shorted it at 102, and we got out at 103.01, and right now it's at 103.96. Why? Because it said if the Dow really took out that 12,700 level, which is absolutely key to my work, the market would have dragged everything down, and we would have had this 103 round number with a doji candle. And if that doji candle if it closed below it, it said you could touch the 101. It's now 101.44. It was, I think, 101.22, 9-period exponential moving average. And that meant if Monday opened weak, we would have a very nice position, because I could then put I could lower the buy stop. So 1 point, not even a 1% loss, but I felt I had to do it, and I'll explain why. Because there are so many stocks with round number highs. Let me just go to my round number high. Actually, while I'm looking at it, let me just give you the numbers. Dow's up 49 at 12,905. S&P's up 370 at 13. 61. Comp index is up 21 at 29.55. Gold is down 6 at 15.89. Let me tell you that GLD closing underneath that major up channel this week, and I believe under the 9-period moving average. We'll look at it as soon as I find what I'm looking for. So that's telling me that gold is still going to go down further. Silver is down 10 cents at 29.07. High-grade copper is down again to 65, down 3.95. Crude oil is down 22 cents, 96.86, and bonds are up a half a point at 144.26. So round number highs. Listen to this. You've got COG, which made a round number high. Why have I got that here? No. Oh, all-time high. 45 was the all-time high, and it had those two bars of the monthly chart that was slightly lower. The right side was slightly lower than the left. 45 was the high in November of 2011, and 44.60. Just 40 cents lower in December, and look what's happened. Pullback very sharp. That's the sharpest decline it's had since 2010, January of 2010. Cisco. Oh, that's really going back. Wait a minute. Cisco, I have to go back. Peak F top in the weekly chart at 21.30. That wasn't what I was looking at.
Noon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities.
Okay, all the way back. 82, round number high, all-time high if you're looking at Tiger TV. But let's just get the most recent ones. Starbucks, SBUX, round number 62 high. Last month, and pulling
Kate
back.
Sends out her weekly newsletter to her.
It's just one technique, but it's one technique in my book here I haven't even added them up, of dozens of techniques. So if you can put it together, that's why it was a good risk reward. 62 was a round number high on the 16th of April for Starbucks, and since then it's pulled back all the way to 53.05. Hey, tell me that's not a nice little technique there. The most recent ones, I don't want to go too far back. Let's go to MHK. What is MHK again? MHK is Mohawk something? Yeah, Mohawk Industries. Oh, I took it out. No, it didn't. 75.44. I thought I'd written that in. Oh, 108.00 was the all-time high, May of 2007. So I just, I forgot to look at the date on that. I really wanted the ones that are the most recent. Well, there are a bunch. Oh, here we are, DuPont. DuPont, 57, round number high last year in May, pulls back under the 200-period moving average to 37.10. Now it's running again. The most recent time made a little double top. This is going to watch real closely because it's making a cluster formation. 53.93,
every Wednesday
53.95 high. Week of March the 16th, and then two clusters at 53.98 in April 27th and 53.98 double top. 2-bar double top. We're going to watch that closely for DuPont. All right, first caller, we've got Mike in Palm Harbor. Hi, Mike. How are you? Mike, you there? Oh, I didn't see Mike, and I said I'd take him right away, but I didn't see that until right now. Mike dropped. All right, Mike, XLF. This is very important. The XLF, which is the S&P Select Financial Spider Fund, is at 14.90, down 8 cents. It gapped down. It went all the way to 14.64. Okay, now let me just explain something. What I was trying to impart to my subscribers of my opening call, that's my daily service that comes out every morning starting at about 6:30. I said this chart over here, the Dow chart. I show exactly what we're looking at. I explain. Hello, you there, Mike?
Yes, this is Mike. How are you, Basil?
Hey, I'm pleased. Often you just drop off, but now you're right there. So, Mike, you'd like to look at the XLF. Do you have a position at all?
Yes, we've spoken many times about Citibank and BAC and so forth, and it just, again, Wall Street shows just how childish the traders are by connecting Jamie Dimon's company, which is nothing like the business model of the other banks, why people do these sectors. And it's always intrigued me and upset me for the last 10 years when something in a sector falls,
weekly news, everything
else does, even if that other company has nothing to do with that other business model at all. I mean, they don't trade at Citibank.
Mike, let me just tell you what I was going to say before you came back online. I was going to say what I've been trying to extrapolate the information and impart to my subscribers is we're going to find out here. One thing that's very important is that you can't think of the United States. Oh, that's right. That's what I was speaking about the other day when I gave a talk to a group here in Boston. I was saying, can we extrapolate from the data? You need to have the generals and the soldiers moving in step. You can't have the generals. You can't have them going their own way, but only for a moment. You can't have the soldiers going for a little bit longer and then the generals catch up. That happens. But you really want to have them all going together. So my question was, the question this morning was, is this going to be seen as an isolated event that might affect some parts of the banking community, but basically it's just a very bad thing that was done by JP Morgan, and therefore the other banks, after a brief pullback, will be looked on as the United States will be looked on as still being strong if we eliminate the Europeans. But at some point, they both rub off on one another. So that was what happened earlier this morning. They both rubbed off. Now what you're seeing is what you're talking about, is that the isolationist aspect is that you can separate, you can compartmentalize something like that. The day is young. So far, there's a fabulous spring from the 1464 low above the 200-period moving average. And I was looking at this last night at the 120-minute chart said, wow, we're a little bit vulnerable to a pullback here because they were rallying when the news came out. That means they can still turn down. So a lot will happen at between 4 o'clock this afternoon and Monday at about 10:20 in the morning, because that's where over the weekend you'll sift through. We'll see where we close today. But your concept of saying that you can look at the banks and or the index itself as being separated is really what's happening right at this particular time, because what's happening.
As people watch this thing come down in Europe, it also is really very odd to me. I have relatives in Italy. They have probably 10% of their money in Italy now. 90% of it is in America, through a condo they bought, through some other investments that I'm helping them with here in the stock market. And their money's in America. Now, they've done all this in the last year. Now, that's just one person. Many, many people in foreign countries are moving their money to America, and no one will talk about that.
No, you're absolutely right. I know that many people are. So, you want to look at a particular stock?
I was just wanting to talk about the XLF, and you can, expand on that a little bit, but believe me.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shree's Ultimate Growth Stocks free for 2 weeks.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of The Money Game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now. It's that time of year again, and the Great Panther Silver Summer Silver giveaway is back. Every day in June, Monday through Friday, we'll be giving away a Great Panther Silver 1-ounce silver bar, and all you have to do to enter is visit the front page of TFNN.com and fill out your entry. Great Panther Silver and TFNN wishing you a great start to the summer. Sign up today to have a chance to win a 1-ounce silver bar during the Great Panther Silver Summer Silver giveaway the whole month of June at TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. Basil Chapman, and the Dow is now up 48, and the S&P is up 6. If anyone's looking, the ChapmanWave is really a very important part of my methodology. If you look at this 5-minute chart of the E-minis, I made a little cartoon out of it. You'll see that the low bar of 210 this morning it went to a peak D top, turned down, came down with this diagonal line. There's a left side, right side price time match, and it comes down to retest at 1345.50 at 9:35 this morning, and then runs up to peak A, peak B, peak C. When it was at peak C, I drew in the peak C to show that this, and then I drew the little face here, which implies that there should be a little top to it, and we've gone to peak D. Now the S&P needs a little bit of regeneration of energy. It can hold and maybe make a high level peak here, because the 10 minutes has gone to leg D. But the fact is that the E-mini 120-minute chart, look at these beautiful arches, all going to, most of them going to peak D, some going to peak E, and then there was unusual peak C minus. That's a tip-off that there's something's happening. 1411.75 pulls back, and look, we're in the rectangle formation, trying to get back to the 63.75. If it closes, if it pushes any 120-minute bar in leg C, pushes above that, it should still try to make a leg D today. So this is very interesting. So I just wanted to go through that because I know some of you like to look and see what I've got here from our futures charts. We're going to go back to Mike right now just to finish up. Hi, Mike.
Yes, Basil. I've been using your charts and others and my own that I've developed. I've made 10 positive trades in the XLF, and I guarantee you that this slight pullback is just going to be a rubber band situation, and it's going to set us up for the next leg up. We're talking a serious leg up because we're down to the Citibank and BAC in that category right now, and they're showing nothing but strength. Absolutely nothing. I don't care what's on the news. Absolute strength in the...
Let me just do this because we've got some callers waiting in line. Let me just do this, wrap it up. If you're looking at Bank of America right now, folks, what's happened is it's made a series... let's get rid of that because we've already finished that trade. If you're looking at Bank of America, which is at $7.75, up 4 cents, what I'm looking at here is it's making lower lows and lower highs. But for the very first time, the MACD is flattening out. The stochastic is making a W formation at 12%. That says that if Bank of America does not take out the low of today, $7.41, by Tuesday, but instead Tuesday afternoon, Bank of America is trading closer to 8.2. That'll be the first time in a long while, in fact, since the 2nd of April, that Bank of America has been able to close above the 9-period exponential moving average. No, it did it for just a brief moment on the 12th, but it couldn't hold it. So what we're looking at is that there's a chance that, yes, it's discounting the bad news, and I'm with Mike in looking at this, trying not to listen to the news. So, Mike, that's what I'd be looking at, and if you are in it, then I would just say that if it was to take out $7.25, the low today is $7.41, I'd be careful because that 726 is a simple moving average, the 200-period moving average. Most fund managers do look at that. If it closes below that, I suspect they'll start selling. But right now, it's flattening out with a chance that it's going to go slightly higher on a purely technical basis. The monthly is still terrible, but the weekly is starting to improve, trying to make a handle formation out of the double top. Thanks so much for calling, Mike. I do appreciate it. Let's go to Gary in Tampa. Hi, Gary. How are you?
How you doing, Basil? Can you hear me okay?
I certainly can.
Okay. I had bought a Panera, PNRA, I think it is, Panera put, 120 for the 150 for $1.20. I have a stop at 0.4, I think.
Okay, now let me just go through this then. Where will I find it? Oh, I'll find it right here. So you're looking at, so you took the trade that I said was a trade, but it had to be at a certain time, and actually it hit that later than the time I'd recommended, right?
I think so, yes.
Okay, yeah. So
I forgot to take it out, put it that way, and then when I got back,
that's a shame. That's a shame because I was absolutely determined that was a trade that I needed to time it exactly right based on the waveform and the time sequence, and we did miss it. We missed getting it at 150 or better. It actually rallied quite nicely. Then it pulled back. So now what I'm looking at now, I'm going to go to that. Give me a moment. I'm pulling it up, and I'll show the chart in a moment. Here it is. That was 150. Okay. So now it's trading at 60 cents, right?
Correct.
Okay. So I'm going to do some work on it, and I'll be right back with you straight after this break. Folks, we've got Gary in Tampa. We're looking at Panera Bread.
What you think about, you bring about. What you focus on grows. If you're committed to becoming an extraordinary trader and investor, then make mastery your outcome. Yes, my best student, Steve Rhodes, became my best teacher. But even more important is what he's taught me, and the time is now for you to take advantage of his knowledge.
Thanks, Tom. I've learned that it's not what we do once in a while that shapes our lives, but what we do consistently. I want to teach you the consistency that exists in the stock, futures, forex, and commodity markets day in, day out. For one solid day, Friday, May 18th, I'm going to conduct an online master trader course that'll teach you how to buy and sell the D point. This one pattern alone, with the single best entry and exit techniques, when combined with my money management strategies, will create extraordinary rewards for you and your family. The course will be archived so you can review it as many times as you'd like, and it'll teach you to become a master. All the details are on the homepage at tfnn.com. Sign up today because mastery is one click away. It's your decisions, not your conditions, that determine your destiny.
Wow! Go get them, folks. You've heard Tom O'Brien on the air, and you've always thought about trying out his newsletter, Market Insights. Well, now is the perfect time. For a limited time only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. If you decide to cancel within the 2-week trial period, pay absolutely nothing and keep Tom's book as a free gift from us. Tom sends out his daily newsletter each morning by 9:30 a.m. with trade recommendations, including price targets and price stops. As recently as March 21st, Market Insights subscribers closed out a position for more than a 25% profit in just over 2 weeks. To get your 2-week free trial to Market Insights, along with your free copy of The Art of Timing the Trade, Your Ultimate Trading Mastery System, visit the front page of TFNN.com. Supplies are limited for this one-of-a-kind special, so act today and don't let this opportunity pass you by. Offer only valid for new subscribers. Has the current market volatility continued to stop you out of trades when temporary market spikes move against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the advantage of keeping your trades open even when the market temporarily spikes against you. Nadex's innovation has allowed them to come up with a line of unique short-term binary options that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi folks, Basil Chapman here. We're on with Gary in Tampa. I just wanted to quickly get this out because I had a question in the den. It was a question that was asked by Art on Wednesday, and I ran out of time, and I'm going to do it just as I'm going right back to Gary. But ARMN is American Core PLC. It's trading at 1163. It's up 5 cents. The chart pattern says that it is held beautifully by not pulling back underneath the gap up of 10.50 on the 26th. So far, that's a good sign. So I'm going to hold it right there to say that what I'd be looking at is if you're in the stock, I would take a little bit off if it closes under $11.10 today on Monday. But if it breaks above 11.97, that's really nice action. It could still go to a leg D. Market conditions are really important as well. But so far, that's what I'm looking at. Now let's go back to Gary. So Gary, Panera Bread, as far as I can tell, everything about what I've done in my study of the charts, and I've spent a lot of time on Panera. Oh, this is the one. There was one stock I was trying to find all of last night that missed making a round number high by a penny, and it was a big triple-digit stock. It was Panera. It went to 165.99 as a peak E top in the monthly in March, and the technicals in the monthly are still very good, but the technicals of the weekly are really poor. That says to me that those restaurant stocks, I think, are vulnerable as well as the apparel area. And I'm looking at the AZO type stocks. That's the auto parts, to see when they start to really take it on the chin. this market should be coming down quite sharply. So I'm going to do a quick overview, and then I'm going right to Panera Bread. Overview is, if the Dow breaks 12,700 on a closing basis anytime in the next week, that says to me this is now all overhead above that. So that's my key. On a shorter-term basis, the reason why I keep saying it's a rotational thing is every time I look at stocks, there are some stocks that are looking really strong, but there are a lot more that are looking weak. So it's a bifurcated market. You've got to look individually at these stocks. Now, Panera is one that says to me, and I'm waiting for Friday today at 4 o'clock to see where many of these close, but it says to me that the doji candle that's possibly forming right now in Panera, if next week, at any point next week, if it takes out 151, it's at 155.86, it does not it makes quick down moves, but it comes back really quickly. I'm not sure it's capable of doing that anymore. The monthly chart doesn't give me any clue, but the weekly says the price should catch up to the technicals at some point very soon. That the distance in the MACD between the fast-moving average, if you're looking at Tiger TV, you'll see that yellow line, the fast-moving average, and the red of the MACD, moving average convergence divergence, says, this is just not good action. So now, what do you do with the put? The put right now, I just did a quick chart of the put going from the low of the 3rd of May at 0.48. It ran all the way to a peak D right to the 200-period moving average at $2.40 on the 8th of May. We were looking at it on the 9th. So the 9th, we got it. If you had got it, it would have been just under 150 or less. But because of the time period that I said, that's the only time we can get it in, we actually missed the trade. But it did spring back. It went to 195. So that's 40 cents. It got a 40-cent gain. But now this is the issue. You've got 1 week to go. It's a pity that if it was 2 weeks, I'd say to you, I have no qualms. You can hold this because you will at least get your money back. Because of the shrinking premium, that's an issue. So between 60 cents and 40 cents, I think you've got quite a bit of a cushion until Tuesday afternoon. And then if it's holding anywhere in the where did it go? Back here. If Panera is holding anywhere in the 155 area, 154.70 or 154.50 area, they're going to shrink their premium, but it should give you 60 cents to 40 cents for a good part of the early part of the week. This is what I'm going to say to you. I would not add to the position. What I would try to do is I'd get out as close to the 150 as possible. Do you have more than one position?
No, I just have one, and it's at 120, so I'm not as bad as I could have been.
Oh, is it 120? Why am I looking at... Oh, why was I showing...
No, 120, $1.20 for the put.
Oh, that's what you bought it at?
Yes, and it's the 150. It's the 150.
Oh, okay, all right. You know what? If that's the case, you know exactly what your loss could be. I'm going to make a recommendation because your loss would be 120 plus commission, right?
Correct.
Why don't you do this? It's almost like it's an experiment in real time. I suspect that it's going to hold above 60 to 80 cents for a good part of the early part of the week, unless Panera suddenly goes to 157, and then obviously it's going to shrink a lot. I'm going to recommend, if you're prepared to do this, hold this all the way through until Friday afternoon for a week. Because if Panera starts to turn down, it's going to be very quick, and it's going to take out the low of yesterday of 152.78. And if it takes that out, then it's going to retest the bottom of 151.05, and immediately that put's going to go to 175-ish, 185.
Exactly.
And then you can make up your mind what you want to do, because my theory always is, if you do something thinking it's going to go up, and instead it goes down, and then it goes down even more than you thought, when it gets back to even or close, it's your obligation to get out of the trade and say, thank you for giving me back my money. And then you can even put the trade right back again, but it's new thinking. It's not old thinking. It's a new position.
Right.
So that's one way. Or you just...
I'm sorry.
Yes?
I've always noticed that, right, like the Tuesday or Wednesday before expiration, they give you a shot. They usually give you a shot.
Exactly right. And I suspect, because I think Panera is making a pretty big top here, all Panera has to do, and it's at 155, it should be no big deal for it to go to 1666.30 to break that 165.99 high. Normally it would be nothing. I think Panera is stalling for a good reason. I think technically it's saying Panera is probably going to break 146, the 9-period exponential moving average in the monthly chart in June. So give it a week if you're prepared to do that. Otherwise, just take your money now and just say, you know what, that wasn't a great trade, and you get something. But, you know, for that little bit of money in an overall portfolio, I would say to you it's really worth watching Panera closely, because if Panera closes day closer to 155, and that would be a strike if they had a weekly option, then there's a chance that if the market starts to pull back again next week, which is not impossible, it could certainly happen, Panera will come down. So that's my recommendation. Otherwise, you must just get it out and say, I'm done. I'm taking some money off the table.
No, I like yours. I appreciate that, too. Thank you.
Thank
You're
you.
thinking exactly how I was.
So let's see Monday at this time what's happening. If you want, you can call me, but certainly Wednesday we'll be looking at it much closer. I intend to actually put another trade on Panera on the short side at some point, but our portfolio, I've got, I don't like to have too many trades on, and I'm getting to that point where I just don't want anything else at this particular point. So thank you so much for calling.
Thank you. Bye-bye.
Thank you. Let's go to Kevin in Sacramento. Hi, Kevin. How are you?
Good, Basil. How are you doing?
Very well, thank you.
So, Basil, let's look at Monsanto, symbol MON. I have May. I have a May put spread on it. I own. I bought 10 of the 72.5, and I sold 20 of the 70s. I was hoping it'd come down.
Okay.
I was hoping it'd come down and fill that gap right around 70, and that's kind of what I was playing for. Just curious what you thought on that.
But it just did. It filled the gap between 72.80 and 74.10, the gap from the 4th and 5th of January.
Yep.
There's
another one down there on December 30th.
Oh, the 30th. Oh, my goodness, there it is. So, okay, so you're looking at the gap of 70.69, and it went to 71.08. This is very interesting. Folks, we're looking at Monsanto Company. It's at MON is a symbol. It's up 78 cents to 72.94. If you're looking at my charts, do you see that the 200-period moving average, it hit it? 71.09 is that 200-period moving average. It went to 71.08. It could have a little bit of a bounce. I think you're in the right trade, but two things have to happen. Any rally next week, I would say that 72.50, it mustn't take out 76.31, the 9-period exponential moving average in the weekly chart. In fact, it should not go above 75, between 75.01 and 75.39. It should reverse at that point. And what you really want to see is that sometime by Monday or Tuesday, it is in the 70.43 area, which is really your objective. Will you immediately take it off at that point, or take some of it off? How would you?
Well, what I might do, if it's not too far off from the expiration, is just sell the 72.5 and let the 70s expire. Of course, if it comes back in my range, I make money anywhere from 67.50 to 72.50. So, of course, I'd love to see it trend to that gap around 70.07. But if it got too far up out of my beyond the 72.5, I'd probably sell some of the 72.5 so I could make some money, and then let the 70s expire.
You know what? Just exactly what I'm looking at. The stochastic and the MACD in the 120-minute chart are turning up, saying that if it doesn't move with the technicals, in other words, if the technicals move up even a little bit higher, and Monsanto is unable to get above 72.78, when they turn down again, this is going to could retest the low of today, which is 71.08. Now, what you've got to be careful of, if suddenly it picks up speed, because there's a positive divergence between both the MACD and the stochastic, if it picks up speed, it could very quickly go to that little doji at 74.18, that could be tested, and then you won't have that much time for the way down because you're talking about Friday a week, right?
Right.
Okay, here's my recommendation. The day is young. Anything can happen. It's a nice candle that is looking like right now. If it starts to even get into the 72, 66, are you able to take just a little bit off just to take some profits now?
Absolutely. Absolutely.
Then that's what I'm going to recommend you do. In fact, I would take a little bit off right now, and if it starts to close towards under the 72 by 3 o'clock, you can actually add that little bit back again. So I use money management here because it's hit the 200-period moving average in the monthly. That's in the weekly chart. That to me, that's saying, hey, got to be careful because it's had a big move down. It could easily have a bounce. Not only that, I'm going to just put this together. I'll keep you online because I had questions about this in the debt. I want to put the market perspective in terms of oversold, overbought. The TLT has made leg D up in the daily chart. That says if there's any further rally on Monday, bonds could test 118.27 and maybe even slip down a little bit because the volatility index, the VIX, is right now, it got repelled by the 200-period moving average in the daily chart, and it's only at 18.78. So it's pulling back, and the dollar, DXY, the dollar earlier was rallying, and it's in leg C, making a potential doji candle. So that says it could go on a very short-term basis. We might be seeing this bounce extend a little bit more into Monday if it closes towards the high. So that's what I'm looking at. What you really want to see is by 3 o'clock, I would expect if the Dow is down, if the Dow is giving back all the gains, only up 15 or negative, then your trade is going to start to look even better. So that's the way I would do it. So don't do anything right this second. Take a moment, see what's happening. If you're looking at a 10-minute chart, you can do that. But at this particular point, it should be close to the high of the day, and it should start to pull back under 72.37 or so by 3 o'clock. If it's holding up here, you might want to just take a little bit of money off in case Monday it suddenly pops up.
Sounds
but
good.
that was a great trade and good eye. Congratulations. Thanks so much for calling.
Thanks, Basil.
Good. And that was Kevin. Oh, we got a caller. We got Mike in Ormond Beach. Hi, Mike. How are you?
I see that, the bounce that we're having, it seems like it's fizzling out, and I was wondering about shorting the IWM, and I wanted to know your opinion of that.
On IWM?
Yes.
Okay. And I know that my great backup, Steve, is just waiting to go to help me out because I have to leave very soon. So here's the IWM. IWM had a rally today. It's at 79.04. The iShares Russell 2000 index, it got stopped exactly at 79.61 is the 79.61 is the 9-period exponential moving average. It got repelled from that at 79.56. That says to me that do you have a position at all?
Well, I'm just kind of studying it now, and I saw that it got repelled by the 9 EMA, so I thought, maybe we'd be heading back the other way.
Okay, you know what? I'm about to leave, and Steve Rhodes is going to take over. I know Steve will do a fantastic job, and he's got this great webinar coming up in a week, which I highly recommend. Steve will take over. You hold on the line. Steve Rhodes will be here sitting in for me. I'll be back on Monday. My service is the opening call, and have a great day.
Put the power of the ChapmanWave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's ChapmanWave methodology for several years now. His ChapmanWave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the ChapmanWave and very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his ChapmanWave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit tfnn.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
I'm your guest host, Steve Rhodes, just filling in for Basil here for the last 4.5 minutes. And before Basil went to break, he was on the phone with Mike in Ormond Beach. Mike, you still there?
Hey, Steve, I got a question.
IWM. I know you were looking at IWM. You're looking to possibly go short. Is that correct?
That is correct. I mean, to me, it looks like we're in the B to C portion of an ABC down.
Okay. What's the time frame that chart that you trade off of?
Well, I kind of look at them all.
Okay.
But, mostly the daily chart. That's what I've been really...
Daily chart. Okay. All right. So what I'm going to do is I've got the 10-minute charts up here on my screen. You know, it's 12 o'clock, almost 12 o'clock, so just a few hours left in the trading session here. And let's go take a... Now, if you were going to go short, the Russell 2000 would be the place to do it. It's the weakest index right now.
Right.
Actually, you know, it just turned slightly positive by 3 pennies. So it's the weak player out there. First thing, now I'm going to be doing a webinar webinar a week from today, and it's really all about being able to buy and sell the D point. So since I'm on a 10-minute chart here, we're going to go take a look at a couple things that will help you to make your decision. I think there's going to be a slight bounce if you wanted to go short. And again, we're going to look at the intraday chart. So I'm going to start with the dollar index because you're going to see these patterns are made time and time again on any time frames. And so in the dollar index at 2:30 this morning, King Dollar was trading up at 80.48. That was your A point. King Dollar then pulled all the way back into the 5:10 a.m. time frame when it got down to a low of 80.28. It did a normal retracement. Normal retracement is 0.618 or 0.786. You want to always be paying attention to those sacred geometry numbers. In fact, the point. Let me hold on a minute here. It may not have been a 0.786 retracement. Let me just make sure I give you the right number here. So we're going to take a look at our retracement tool. We're going to go from our A point to our B point. Yeah, close enough. The 786 would have been 80.44. What it actually got up to was 80.43. Will you give me a penny?
Sure.
Okay, good. Okay. So within a penny, makes a little shooting star, and it completes an A to B equals CD. In fact, the price projection, and this is where you want to learn how to buy and sell the D point. That is what I'll be, not necessarily you, Mike, but anybody out there listening, and you specifically, I think anybody from a trading standpoint, you want to be paying attention to the D point. You want to let the market do 75% of the work for you. In this case here, the price projection of a 1-1 A to B equals CD was $80.23. It actually got down to $80.21. Now what it's doing, when you make an A, B, C, D pattern, it's doing a normal bounce up, the King Dollar. And if we just simply now go from the A point that was established at 2:30 all the way down to the final D point at 10:40 this morning, your first bounce is going to be to that 0.382 area. It's here where you're going to have some information released to you. Typically, you do a bounce to a 0.382 area, and then it might pull back a little bit. So let's say King Dollar would pull back a little bit. That would give you a little bit better entry on the IWM, whether you're trading the IWM or the TZA, whatever it might be. And again, so there's one AB equals CD pattern. What I also am paying attention to, I don't know if you catch the Money Masters show that Tom and I do, and on Fridays, it's the Nadex trading hour. But one of the real key areas that I'm looking at, if you take a look at where is it we're at right now in the market, we're almost exactly where the market closed on Friday. So if I take a look at the ES Mini closed at 13.62 and a quarter. We're at 13.60 even. That line, if you're watching us on Tiger TV, that's also something else I'm going to be teaching folks to trade that attend my Master Trader course. This is something that is absolutely not out in the public environment. My subscribers, my clients know about it, but I'm going to be able to, that point there is acting as either strong resistance or strong support. At this stage here, it is strong support. You can see coming across that area, and it has nothing to do with actually Friday's close. It does because of this specific thing. But that's another element that I'm going to be teaching. If we quickly go over to the IWM, because time flies here. Flies too much. What I would do, you're at a good point if you want to go short, right. To go ahead and take a stab. But make sure that you've got a stop in place, okay?
Yes.
All righty. And you can send me an email, steve@tfnn.com. I can send you a couple charts you can look at.
Okay.
All right, Mike. Have a great weekend. Folks, stay tuned. It's all about health, and our man, Nico DeHaan, is in the on-deck circle. He'll be right up.